Hey guys, Breezy CPA here, your certified public accountant, back with another video. In this video, we're going to be taking a look at this developing story here. Almost 500 million pounds is wiped off of W.H. Smith after an accounting error occurred. So W.H. Smith is a company based in the UK, and almost 500 million pounds have been wiped off of their market value as of today as a result of a $30 million pound accounting error that has taken place on their books. So taking a look at their stock here, we can see that it has plummeted from right around 1100 down to 640, more than a 40% drop in their stock price based off of this accounting error that has taken place here. And basically, what I want to shed light on is the importance of proper accounting and the impact that it can have on the financial markets and the credibility in these companies, especially considering all the recent talk about AI taking over within the accounting industry and doing a lot of the various accounting tasks. All of the offshoring that has been taking place, the lack of accountants within the profession, and the decline in the number of accounting majors and people becoming CPAs, as well as the aging boomers who are retiring from the profession. So, this is something that we can be seeing potentially a lot more of in the future if things aren't corrected soon. So, taking a look here at W.H. Smith's annual report here, we can see that W.H. Smith is a travel retailer, and they say here W.H. Smith PLC is a leading global travel retailer for travel essentials with a smaller business on the UK high street. And they reported a revenue here in 2024 of 1.9 billion and a profit of 106 million here. They have a total of 1,791 stores. So this is a relatively big company here with almost $2 billion in profit, and yet they weren't able to get their accounting right on their books. So this is something that should be of concern when it comes to many of the companies that are going to be relying on, AI in the future. And outsourcing and things like that. So, taking a look here, let's see who are responsible for this accounting error here. Here we have some of the staff from their company. This is the chief financial officer, but I think he recently stepped down here. It says here that Robert, the chief financial officer, will step down from the board on November of 2024. So let's see here what they say here. Um, yeah, so it was announced here that after more than 20 years of business, Robert Moorhead, the CFO, would step down, and that he was succeeded by Max Izzard, who joined W.H. Smith on September 1st, 2024. So this guy's having an interesting first year on the job here as the new CFO of the company. Now, I don't know if the guy before him, Robert Moorhead, was aware of what was going on. But and then just left it up to Mike to figure it out before he left. But yeah, this brings into question a lot of different things regarding the efficacy of the accounting procedures that were taking place within this company. So, taking a look at this article, almost 500 million pounds wiped off of W.H. Smith after the accounting error. Almost 500 million pounds was wiped off, 30 million accounting error. W.H. Smith warned investors on Thursday that they expected profits at its North America business had been significantly overstated, with the division expected to bring in 25 million this year, down from the previous forecast of 55 million pounds. So more than half of their profits. It means that the company's full year profits are expected to be around 110 million, not the 140 million that analysts had previously expected. The blunder led to W.A. Smith's shares falling 37%. we saw that it was like more around 40 now. This knocked almost 500 million off of the company's value and sent the company's shares to their lowest level in 12 years. So we can see the significance that these accounting errors can have on these major companies. It's really important that the accounting is done correctly. Otherwise, the investors lose confidence in these companies and their shares can drop dramatically. They are currently on track to record their largest ever 1 day fall. Bosses blame the accounting error on the accelerated recognition of supplier income, which led to profits being overstated. So, everyone's blaming everybody else, right? Bosses blamed the accounting error here on the accelerated recognition of supplier income. But hey, as the boss, aren't you responsible for making sure that the numbers were correct? I mean, you're the boss, right? So when we're talking about an accounting error like this, it's not like one person is responsible for this accounting error. This accounting error has to go through multiple different levels within the organization. Um, being verified by multiple different people along the chain. So we're talking about the staff accountants who, do the manual entry of the numbers. We're talking about the finance manager. We're talking about the CFO of the company, the controller of the company. We're talking about the CEO of the company, as well as the internal auditing team of the company. So all these people looked at these numbers and they said that everything was okay. So, we're going through multiple different levels of people who are professionals, right? To verify these numbers, and yet they still got it wrong. And then ultimately, you have the external auditors, right? So in this case, the external auditors for this company here was Price Waterhouse Cooper. So let's take a look here um, at their independent auditors report here, and we can see that for the purposes of the scope of the audit here, the audit of the North America component was performed by Price Waterhouse Cooper, Las Vegas. Our audit gave us coverage. We performed a full statutory audit of the company, W.H. Smith. So not only did internal staff and managers and bosses get this wrong, but then you have major auditing firms. I mean, we're talking about one of the big four auditing firms, Deloitte, KPMG, PricewaterhouseCooper, and Ernst& and Young here. And one of the big auditing firms, they didn't even spot these mistakes. So, this really sheds a light on the state of the current accounting industry. Um, and it's worrisome in the sense that you can have these major financial errors taking place and nobody spots them along the way. And I don't know if this is a result of the AI, if it's a result of the outsourcing, just not enough staffing, or what is going on. But this is unacceptable to have something like this happen when you have a chain of people looking at these financial statements and nobody is picking up on these major errors. I mean, we are talking about a huge chunk of money that was misappropriated on their financials. So they say here the company's head office is understood to have been alerted of this issue last week. Max Izzard, the chief financial officer, has been flown out to America to settle the matter. So, Max is on it. He wasn't able to spot the error initially, but he's going to fix it now. W.A. Smith has also called in Deloitte to conduct an independent review with more details likely to be revealed when the company releases full year profits towards the end of the year. So this is embarrassing. You got Price Waterhouse Cooper who didn't do their job properly, and now you got to call in Deloitte to who've had their own fair share of mistakes and scandals over the years, and they're going to take a look at what PricewaterhouseCooper did here, and Yeah, now you're going to have everybody looking at this whole thing and trying to figure out what the heck is going on. In preparation for the group's year-end results for the financial year ended August 31st, a current financial review has identified an overstatement of around 30 million pounds of expected headline trading profit in North America. This overstatement is largely due to accelerated recognition of supplier income in the North American division. So, they recognized income from the suppliers before it was supposed to be recognized. WH Smith's North America business comprises of 320 airport stores under names la la la. The company is focused on a lucrative travel business and la 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 here. Um, Agreeing to sell its 480 high street stores to the investment company Modella Capital. So this seems like it's a private equity company. So, we have AI, we have offshoring, we have private equity entering into the building here. We have a declining workforce. And so we have all of this chaos going on right now within the accounting industry. So, it's not a surprise that these errors are coming up, and they're costing these companies millions and millions of dollars here and millions of pounds in this case. So, yeah, let me know what you guys think about this situation. What is the your opinion on the current state of accounting, and do you expect to see more situations like this in the future? Because I think they're going to become more and more frequent in the coming years, especially with the deregulation that's taking place within the industry and the declining workforce. So, we'll see what happens. Thank you to all the new subscribers. If you haven't subscribed to the channel already, make sure to hit that subscribe button. Thanks for watching, and I'll see you guys in the next one.